Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we had another wild week, and although it was a shortened trading week thanks to the New Year celebration on Tuesday, we did have enough volatility to convince the investors who are on the buy side to go back into the market with incredible economic numbers coming out, blowing away the new jobs report forecast, and it was just a rock and roll day, like I said, of volatility. Now, this is a 1-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. And if you've been following along with the Market Guys report, you'll know that I leave my lines on the charts from last week's report so you can see how the forecast worked out. And as I zoom in here, you'll see that this diagonal line is what I drew at the close of last Friday's market session. And the end of the line is my target. There's a couple of things going on here. Number one, the blue line down here is the %K on the stochastic, and that's telling us that the momentum is still moving higher. The other thing is the volume is still relatively high, telling us that the buyers are still in force. It didn't look like they were slacking off towards the end of the trading day here on the 4th as we record this, and it looks as though there's a possibility we could break back over that 20-period moving average. So for next week, I'm just going to extend this line just a little bit, with the end of the line again being my target price for next Friday. So I think the S&P will continue to move higher before we see any kind of resistance there. Now, inversely related to the SPY is the volatility index, and you can see that my forecast again was spot on. I said that the stochastic would most likely turn lower. That's what these diagonal lines are down here, and that's exactly what happened. This was a level of support that I said we would most likely test, and although we broke out below that support line, I think that the volatility index is going to continue lower at least until the short term, where we can find some resistance on the S&P. So I'm going to move that down just like that, with the end of the line being my target for the volatility index. The stochastics oscillator is oversold right now, so towards the end of next week, we just might see a bounce in that stochastic, which could turn the volatility index a little bit higher. So keep an eye on that, because we have a support level right down here that could very well hold. So keep an eye on that. Now, with the Qs, that's the Nasdaq market, it's the ETF formerly known as the Power Shares. You can see that my forecast was spot on. I did say that we would most likely rally towards the beginning of the week and sell off towards the end of the week, with the end of the line right there being my target. And so on Monday, we rallied. On Wednesday, we continued. Thursday, we pulled back, like I said. And where do we wind up? Within pennies of my target price right there. So I'm going to erase all these lines, because you can see that the stochastic, this was my forecast for that as well. I said we would most likely go up. I think the stochastic oscillator can continue to go higher, which would then drive these prices higher as well. So I'm going to erase all the former forecast lines. I'm going to draw some new ones for you so you can get an eyeball on that. I think the Nasdaq could rally, and particularly see what happens with Apple. Apple gapped down in a big way yesterday, but it had a nice partial recovery today, and I think that upward momentum could continue in the tech sector. So that's for the Qs. If we look at a more broad-based index, which is the Russell 2000, I said we would rally in the week, pull back later in the week. We did just that. And then guess what? After we hit my target, which is the end of the line, we rallied with the rest of the market. So I'm going to erase all these lines. The Russell 2000, while it's a broad-based index, it does many times lead the rest of the markets. This is very close to a bullish engulfing pattern right here. So I think the Russell could wind up higher, possibly hit some role reversal resistance up here, drawn horizontally from this support level back there. But after it hits resistance, we'll have to reevaluate the charts to see which direction the market wants to go after that. Now, if we look at the diamonds This is the Dow Jones Industrial Average ETF. I'm going to leave my lines in place right here. I think we're going to rally back up to this resistance right here, and then I think we can start to pull back. The only thing I'm going to add to this chart is that I think this momentum in the %K is going to continue higher. So for those option traders out there that are looking to leg into some call spreads, this might be an opportunity for you to hold on to the long side and possibly leg into the short side later next week. So that's what we're looking at for the diamonds. If you're interested in learning more about what we do at The Market Guys, just go to The Market Guys website. Click on the video tab right there at the top of the page. That will bring you to a video library where we archive what we call market shots. These are very short 7-minute videos that will give you a lesson on your schedule. There's no real effort needed here. You just watch the video and you can hit rewind if you need a refresher. But that's what we offer for free, and we also have our trade alert service as well. If you're interested in that, just send us an email or subscribe right to the website and we'll take care of you from there. So have a great weekend and we'll talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.